Good afternoon, team. I trust everybody's doing well and having a great trading day. It's been a busy week and we're now in a position where there's multiple phase twos across the market. So it's now a time where we either be patient, we sit on our hands and wait for the cleaner, clearer, easier to trade moves, should we say, or we adopt more of a smash and grab approach and understand that price action can be messy. We're in a volatile position. So we act accordingly, we get in, we get out, we move on. We don't look to outsmart the market or hold on to trades trading against the overall trend. As we say, as a trader, we want to make things easy with ourselves, and with trading basics does work. Stick with the trend, go with the flow, swim with the tide. It's exactly what we preach. So I just want to go through a couple of key markets today. A few of you guys have been asking for a bit of a breakdown. So look, we'll cover the majors and then we'll see where we get to. First of all, as always, we'll start with the dollar index. Now, dollar index for me is in a position that it is of interest. We're looking at the market now, you can see your lower highs forming and respecting. So we know we've got bearish momentum, the weight of the market's heading down. I do have my eye on this 102 level, and I mean, historically, these charts don't go back too far, but we can see that this 102 mark has held as a previous level of resistance. So we know we're quite high. I also have a bias to be buying euro, buying pound against the dollar. So my bias is to look for market retracement here. And we'll zoom back in the daily and just have a look at more of a detailed look into this. And you can see that price really did. There's your uptrend, 1, 2, 1, higher high, and we've broken the low in here. So we've got a failed uptrend, and I think visually, for anybody that's a visual trader, you can definitely see the weight of the markets bearing to the downside, shall we say. I mean, for the last 7 or 8 days, the sellers have been in demand, and in fact this is the most amount of selling we've seen in quite some time. So with that being said, we must adapt as traders and understand that buying sentiment is definitely leaving the market. And I always relate to trading being a visual game. You can see at the start of the move you've got nice strong continuation candles, and as we get nice and high, it starts to get a little bit choppier. You can see the wicks on the candles indicating that sellers are bringing price down. It's a constant battle of buyers and sellers up there. And again, when we're looking to be on the right side of the market and I'm trading an uptrend, I want to see strong buyers, weak sellers, strong buyers, weak sellers, and I'll be confident to trade that pattern. As we reach these highs in and around an area of rejection, we've started to see tons more sellers enter the market. So I'm definitely keeping my eye on this market, and we may see a short daily retracement to complete what we call a head and shoulders reversal pattern and potentially a move lower. I think intraday traders should definitely be interested in shorting this market if we break below the 102 mark. But look, let's keep an eye on it. And this works both ways. So in a downtrend, we look for strong selling, weak buying, strong selling, weak buying. So what we really want to see here, after these sellers have dragged price down, I mean, you're talking here 7 or 8 days worth of selling has wiped out very small gains on the way up. I mean, almost double the amount of days it's taken to climb has been wiped out by half the amount of time. So we can definitely see the sellers are in control. So look, what we want to see here is either a shallow pullback hovering around this 102 mark and breakouts below, or we start to see the market just piddle a little bit higher, create a new high, which is obviously going to be a lower high formation, and off we go. So that's my ideal scenario, and of course we'll adapt accordingly either way. In terms of pulling the trigger and taking trading opportunities, I mean, that was a fantastic entry in here, and we're now looking at that next move. So I'd personally like to see, I think it's probably going to be the 10 PM bar. We might start to see the sellers creep back in. And if we get a daily close below 102, that'll be fantastic. We've got all this downside to look forward to. So that's what we're looking for here, and fantastic if you got in any of these lower high formations. But look, next move, let's get below that. We're only 26 points away. Let's get below this mark, sellers dominate, and tomorrow we could open up the doors to lots of trading opportunities. Something that we need to really bear in mind, guys, is while we're in a 4-hour phase 2, don't be hasty and look for trading opportunities on a 1-hour time frame, because you're not going to see much of a pattern. And it's very easy to be fooled to say, well, this has made a new higher high, I'm now going to look at an uptrend and so on. It's not that. The smaller time frames exaggerate what happens on a higher time frame. You've got to remember, for every one green daily bar, there's 24 1-hour candles showing buyers' sentiment. We must always relate back to the higher time frame. If you're unsure of trend, relate back to the higher time frame. If you've started to see a breakout, a changing pattern, a break of cyclicity, yes, back to the higher time frames. So for me now, there's no need to look at a 1-hour chart. we want to see a 4-hour trend, and we'll be patient to trade a 4-hour trend. This leads me on to Euro. Euro is something that I have my eye on. Euro is looking great. We can see a lot of upside potential as buyers step in. Again, you can see lower highs really respecting the pattern. And in terms of trend, for anybody, doesn't matter how sort of new or experienced you are, we can definitely see that these are nice, clean, clear cycles. You've got a 20 and 50 moving average crossover. You've definitely got trend support, very terribly drawn there, trend support in the way. And again, we've got our phase 2 time back in with this mark. Now, for those of you that know me, I always like to work in blocks of 50. And the level that we're currently seeing at the minute, especially intraday trading, blocks of 50 for me works. And you can definitely see now, we've got that 0650 level, just shy of a level of break in there, just pissed around at that point as well. And of course, if we go back through history, you're going to see multiple soft levels, so it broke both ways, rejecting this key area. So look, there's nothing to do immediately. Sit tight, be patient. What I want to see in this scenario here is a bullish engulfing close. And I don't mind if it's this candle, or it's the next, or it's the one after. We want to know that buyers are ready to step back into the market. If we just take a look at the recent pullbacks, I mean, this pullback that we've seen in here, we looked at over 100 points in 6 days. This pullback that we saw in here, again, slightly smaller, but you're talking 6 or 7 days, just under 100 points. Now, what we're looking at here, in fact, is 6 days and nearly 100 points. So we're seeing the phase 2 sellers in the market, again, the sellers in an uptrend, not showing stronger selling, which is the opposite of what we want to see. Remember, as a buyer, strong buying, weak selling, strong buying, weak selling. So we're definitely seeing the sellers not as strong as they perhaps were previously when the market was trending down, like we're seeing in here. The phase 2s are relatively same, so that in terms of market cyclicity, market depth, we're all in order for this push high that we're anticipating. So look, we're now closing back above the 200, back above the 20 moving average. I'm going to be looking for the next bullish engulfing opportunity to take the market higher. So let's imagine that is the next candle. Let's say we get a nice big candle like this. Fantastic. What we're going to be looking for now is a buy stop pending order at the high of the candle, stop loss a few pips below the low of the candle, definitely behind this soft level of support. And then we've got a lot of upside potential to really push on with. I would like to at least see a good sort of 3 or 4 to 1 risk to reward trade here. For any intraday traders, follow the pattern. We know that price has to break the previous high to continue making higher highs. So if you're in and out within this region, you're in and out in a safe area to buy. So look, opportunities there. Now, I just want to revert back to the 1 hour chart. Far too many of you are looking at the smaller time frames, getting confused as to the context, the structure, the pattern. Our 4 hour time frame makes sense to us. We're cycling nice. So stay tight and sit tight on a 4 hour time frame. The only time we drop to a 1 hour chart is when we're in a move like this, where our 4 hour and our daily are both going higher, and we then say, this is my 4 hour uptrend. I've already missed the move off the 20 moving average, or missed that turning point, end of phase 2 into phase 1. So as the market progresses, we then drop to the smaller time, looking for multiple trading opportunities. And as you can see, I've got a textbook bounce from the 20 MA in here. In terms of reward to risk, our entry to stops looking at, let's call it 15 pips, and potential gains of 75 pips. So reward to risk in the space of a few hours is fantastic. We will only find these trades and trade in the right direction if we're spending time analysing the higher time frames, making sure we have agreement throughout. It's very, very important. So stick Euro on your watch list, guys. Now, pound's slightly different. Pound isn't quite giving us what we want to see in terms of our patterns that we typically tend to trade. So you can see we've got our higher highs, higher lows in here. The cycles are not as clean. And in this area here, we definitely are seeing lack of buyers. Now, I want you to pay attention to this level. This is a 125 support level, just like we saw in here, just like we saw in here. Price is respecting, rejecting both ways. Because we've seen lack of real movement, if buyers were going to be dominant, we'd see price up here. We haven't quite got that. I want you guys to mark out the previous 4 hourly high, and I want you to look for cycles above this move. So what you may want to happen is a couple of 4 hour candles break these highs, and then we drop down to the smaller time frames, which provide more bars, more cycles, more opportunities, and we look to get in that move. So you can see here it's very messy, very choppy. We've built a bit of a range in this area here. But for one up, phase two, come back to test these highs. Look for bullish engulfings, low test bars to lead the way, and you've got yourself a 1 hour opportunity with confirmation the 4 hour and the daily are both moving to the upside. Aussie dollar's slightly similar, bear with me. Aussie dollar isn't the most attractive chart. Now, what we're looking at in terms of trend, we can see here that you've got lower highs coming into play, and of course lower lows coming into play. This phase two is slightly greater than what we typically want to see. I mean, it's a 280 odd point retracement over the space of a week. And phase twos, as we can see previously, have just been a couple of day pullbacks, This one looks relatively strong. So I want you guys to map out 0.71 on your charts. And I want you to look for breakouts above the high to be an Aussie buyer. This will obviously help should we see the 4 hour time frame cycle, the 1 hour time frame follow suit, and also dollar weakness as well. So I don't want you to dive in here, I just want you to start to be patient and say, look, it's not ready yet, it's messy, it's choppy, but if we start to cycle upwards and onwards, we're going to come into lots and lots of trading opportunities. Kiwi's something I took myself overnight, a bit of a speculative order to be honest based on news, but again, same scenario, we're edging to the upside, we've got lots of highs creating new highs. Be patient, 1, 2, bounce. I would rather sit out of a trade that I can nick 20 pips on today to wait till next week and nick 200, 300, 400 pips in one move, trading a longer time frame, longer move, more confirmed setup. So, and there's your breaker patterns in here, right? Head and shoulders, crossover, cycle, bounce, back up we go. So look, just because the daily is showing deeper retracements, don't sit there waiting for a pullback lower. Start to understand this is the most amount of buying we've seen in the downtrend, which typically is a sign for a reversal, a change of direction. Dollar CAD again, something I trade quite often, guys, but we're not really seeing much of interest, to be honest. As you can see, there's a lot of levels are through here. This 29 mark, or just shy of 29, 129 in here, and again you've got 125. There's a 128 level in there as well. So again, until we get a confirmation of how well this market is performing, not much we can do. Dollar Swiss, as we can see here, we saw a very strong breakout, 7 weeks worth of buying. We're now starting to see the retracement, and the daily pullback has been significantly larger than what we'd expect in a typical phase two. Now, after sort of 7 days worth of selling off, I do expect some sort of fight back, and I'd expect a lower high to come in to push price back lower. So my bias for dollar Swiss is still short, but I'm not diving in, I'm not jumping on a train that's already left. We're going to see some sort of pullback, and then off we go. Now, whether that's a 4 hour shallower retracement, or we start to see a stronger daily pullback, which I would expect, it doesn't really matter. We now know that we can't dive in. So I want you to look for a minimum of a 3 day pullback, in and around this, maybe this 98 level, and then a lower high formation back down. If we get a pullback into the 200, this sort of 97 area, and then we start to go sideways, just like dollar Swiss can do in a phase two, I'll have a stop loss above, look for a bearish engulfing, and take the market back down. So it's all about just waiting, being patient, and understanding the structure here. Dollar yen, I mean, look, dollar yen, we was in over a 40-day uptrend, nearly 2,000 pip gain, dollar yen. So we're waiting for this move lower, it's coming. You can start to see from a weekly chart, we're seeing this phase two. Whether we get another push higher or not, I'm unsure. But all of this move here definitely has to be traded. So as we can see, the daily's heading down in a downtrend, weekly's down phase two. Our 4 hour is definitely starting to cycle. And when we see charts like this, it's easy to read, it's easy to understand. So start to recognize your lower highs, your high points are getting lower, your low points are also getting lower, and I want you to look for rejection in here. 127.50 is an area that I think we can get a bit of a pullback into. I was looking at more of an aggressive limit order entry. Something like that would be perfect to see in reverse, where we have a limit order entry to tell the broker to put us into a sell opportunity at this price. Market opens, tests high, triggers us into the trade, and then finishes us nice and low. A bit like what happened here. If you were just triggered in at that 127.50 mark, by the time that 4 hourly bar closed, you're already nearly 100 points up, rather than waiting for a buy stop pending order on the high of that candle. So I'm kind of looking for a bit of rejection in this area, rejection from trendline resistance, a rejection from 127.50 area. That's what we want to look for. So again, sit tight. Don't be diving in on a 1 hour time frame. Don't be going potty or driving yourself mad looking for trades. Sit tight. Plan your opportunities. Even if you're a sort of a 5 or 15 minute scalper, let the higher time frame start at the beginning of phase. You're going to find a lot more success trading a 5 and a 15 minute time frame if you allow the market to show you where it's going. Too many new traders try and outsmart the market. I want to get in at the highest point and get out at the lowest point and so on. Let the market show you where it's going. All we're doing is jumping on the coattails of the major institutions, hedge funds, banks, and riding the wave, swimming with the tide. We're not being greedy, we're getting in, we're getting out, we're moving on. It's so easy to be distracted by people on Instagram that have had one lucky trade where they're perhaps brought at this point and saying, hey, look at me, I'm a sniper trader. I'm going to be hired by the NY5 soon. Just forget about it. It's ridiculous. You might have one of those in your trading career and you'll never do it again. We've got to be consistent and we've got to be realistic. If we want to be a long-term trader and trade for the next 10, 20, 30 years, we have to find a system that consistently works 7 or 8, 9 times out of 10. That we can approach the market with no emotions, a robotic approach, get in, get out, move on. I understand my setup, I understand my success rate. So I'm playing one big giant game of probabilities and I'll let the market do the rest. New traders don't understand that. It's very easy to be grabbed by bright lights, money signs and so on. But the reality of it is, yeah, you can have a trade like that, you can have a week like that, you could double your account in a day. But if you try and do that every single day, you'll blow your account regardless. End of. So again, slow, steady. Let's risk 1% to gain 1%. Let's target 8 to 12% a month consistently. And you'll be in a fantastic, confident place. And you'll be able to walk away from your trades. You'll be able to close your laptop at night. You'll be able to sleep for 12 hours at night rather than waking up, checking your phone and saying, oh my God, I'm up, I'm down. It's a nice, great place to be. So respect the process. Find a coach, have a mentor, create a trading plan, stick to the trading plan, and move on successfully. If I give any of my students a trading plan, I say to them, if this doesn't work for you, and you stick to those rules 1,000,000%, I can be accountable. You can come and blame me. But if I give you the trading plan, and you don't stick to it, and you're losing, then I'm going to blame you. And that's a fair ground to work on. Anyway, moving on. Dollar Singapore, once it loads. Again, look at this, guys. Lower highs, lower highs, lower highs, lower lows. Just let the sellers introduce you into the market. Let the sellers introduce you into the market. There's a lovely level, I think 137, yeah, 137-ish in here, as you can see. Rejections this side, rejections this side. I may expect to see a pop higher, but let's get another lower high dollar weakness. So my bias is dollar weakness. Now, if we don't get that, we'll adapt accordingly. But I think we will get that. A couple of look at the Aussie trades, because the Aussie trades are of interest. I'm gonna just stick to the daily time frame for you guys here. Because look, this is a different colour. Yeah, cycle down. So Aussie CAD is a daily opportunity short. We only drop to the smaller time frames when our daily market is showing clear direction, like this. So once we get a phase 1, like we're seeing here, at the future, then we drop down to the smaller time frame. So if I just drop down to the 4-hour chart in that area that I highlighted, there's your cycles there. So you've got more opportunities to trade. And imagine if you then drop to a 1-hour time frame, looking at those opportunities, you're going to be sport for choice in the market phases that are sticking with trend below. Tons of trading opportunities. So look, Aussie CAD short. Aussie Kiwi I don't quite see yet. Aussie Swiss isn't quite there. CAD Swiss, again, the same scenario, daily pullback, and then off we go. In fact, have a look in this area here. Can you see we've got a, sorry, my computer's freezing. CAD Swiss double bottom. Just test it. Let's see what it does when it gets to this area. We're not going to aggressively trade this move. Look for a lower high up here. Back down we go. Euro Singapore. If we get euro dollar strength and euro dollar moves higher, it's another cross pair to look at a 4-hour cycle. And intraday trades can look to get in and get out before breaking that previous line. Euro Aussie messy. CAD Gen now messy, but there was a great trade that some of you guys took up here. Euro CAD, again, just keep an eye on what price does in and around this 137 area. Lots of sellers coming into play as we speak. The daily market is trapped in this range in here. And this is what we're going to discuss, and I'll do another video discussing the range and how price is behaving during this current position. Okay, Euro Kiwi sideways. Euro Yen sideways. Euro Swiss, great 4-hour trade now, but I'd like to see double bottoms in this area to agree with some Euro strength moving onwards and upwards. Euro Pound, keep an eye on this area. We're back testing the 20 moving average. We've got bullish formation forming. This last 4-hour candle was a high test bar that showed that buyers were over sort of 30 pips higher than where it closed at one point. So keep an eye on that, guys. Pound Aussie sideways. Pound Kiwi, look at this 93.80 level. I love this on a smaller time frame. As you can see in here, we had a great pin bar rejection there, which unfortunately price dragged slightly higher. We're now trading back below the resistance level, as you can see. Price rejected, 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 and we're now back below it. So what I've been looking for here, you can see you've got a bearish engulfing candle. Look for another seller's bar past that bearish engulfing candle. Once we get one more seller candle, let's say we get a nice big close like this, entry below, stop loss above, target next low. You've got a 2-to-1 trade there. And that would obviously help if we do get Kiwi strength. And we're looking at Kiwi dollar long anyway, so it all kind of ties in quite nicely. Pound Swiss, we had a great course setup which failed to break the lows. So this opportunity that the guys traded earlier was 30-point risk for about a 40-point gain. So definitely opportunities out there. Pound Swiss, we're seeing sideways. Aussie Yen, we're not really getting much direction, but I would like to see Aussie strength start to pick up. Kiwi CAD, we're in a 4-hour phase 2. Higher high, higher low. There's your cycles. Look, 1, 2, 1, 2, 1, 2, bounce. Phase 2, come back into these levels, back above the 200 moving average. Once the 4-hour time frame is cycling above, your 1-hour time frame will follow suit. So we look for smaller time frame bounces, more cyclicity, more bars, more opportunities, and we'll trade in the direction of our higher time frame. Pound CAD's not doing much. Pound Yen's not doing much. Kiwi Yen for me are going to be two strong currencies, which is why this phase 2 is quite a sideways boring phase 2. I'm looking at dollar yen short, which is obviously yen strength. I'm also looking at Kiwi dollar long, backing Kiwi strength. So when we get two strong currencies, although we think it might really move to the moon, two strong currencies just fight each other. It's like two heavyweight champions of the world. It's not going to be a first round knockout. They're both big guys, they're both going to do their best to knock each other out, and that's going to take some time. Whereas if you have a heavyweight boxer and a lightweight boxer, the odds are in the favour of the heavyweight boxer knocking the lightweight boxer out. And that's exactly what we want to see in the markets. We want to see one strong dominant currency, one weak currency, put them together, and that's that burst of excitement we want. And that's typically my strategy in and around the European market open. About 7 to 9 in the morning is my key trading time. In Kiwi Swiss, we're not seeing too much at all. So, as I said, I just wanted to break you through or break down the majors, and I think we've done that quite well. Other than that, guys, there's not much out there. I am looking at yen strength, I am looking at some of the CAD cross pairs, some of the Aussie cross pairs as well, but the key message from this video is the markets right now are choppy, sideways, messy, boring. Not a problem. We move to the higher time frame, we avoid the mess, remove the mess, look for 4-hour cyclicity. A lot of markets, I would say over 10 charts that we just went through, are in a 4-hour phase 2. So that's an uptrend or a downtrend. We recognise the trend, and phase 2 is the pullback against the trend, the weakest part of the move. That's typically messy because it's a constant fight for the trend, whoever's dominating the trend to get back in control. If it's an uptrend, it's sellers fighting away and buyers pushing their way back into the market to continue and remain in strength, showing price action and trend. So when we're in a phase 2, we sit tight, we be patient, we wait for price to get to our levels, our MAs, our areas of interest, our critical turning points, and then we take action with confidence. Good stuff, guys. Well, look, lots happening. There is another webinar tonight at 6 p.m. and one tomorrow at 12 and one Friday at 9. Lots happening at the minute. We've just released our stocks course, so do get in contact. We had a fantastic advanced course last weekend, and of course we've got masterclasses and free trading events coming up in the near future. So look, hope to speak to as many of you as soon as possible. You're more than welcome to use the open door policy and spend some time on the trading floor, but I hope all of you have a great one, and I'll see you soon. Take care, guys.